What's up, YouTube? I'm in the middle of a move into our new apartment, but I wanted to bang this episode out because there's a lot of gesticulation going on in the markets as we approach Liberation Day on April 2. And, that's when the tariffs that Trump has been talking about are supposed to hit. So as we eat pizza and watch a TV and screen tape as that day approaches, let's take a look at some pretty big movements happening under the waters that I wanted to bring to your attention. And the first one is the foreign ownership of equities in the US stock market. And if we look at this chart, you can clearly see that this has just consistently been going up. And we are at all-time highs in terms of the number of foreign owners of US equities as part of market share. And this has only skyrocketed recently. We're looking at over $16 trillion and approaching 30%, right? Okay, so a third of the stock market, the US stock market, is owned by foreign capital. And that's a big deal because if you look at what's been happening is that it's part of basically another all-time high, essentially, of investor allocations to equity. So this is across the board, right? Around the world, allocations to the US stock market's at all-time highs. Now, this has probably gone down a little bit because of the downturn, but we're sitting with all the cash still piled into the stock market. And as you know, when everything's piled into the stock market, that tips the boat to one side and opens it up for movements that can eventually and dangerously lead to a capsize. The bad news here is foreign capital has been leaving the US equity stock market in huge numbers. In fact, this is the third largest drawdown of foreign money from the US stock market. And this may or may not be done, right? Who's to say this is it? This could go down further. This is a big telltale signal of money leaving the United States. And we need to take a look exactly how large this money is. And when you look at that, it gets quite concerning because, when you talk about this from Deutsche Bank, I believe, but if you look at the rough estimates of how much foreigners could possibly sell, and there's two main buckets. One is because they haven't been rebalancing because it's just been going up, so they don't want to rebalance. But now that there's a downturn, they're thinking about rebalancing. And also valuation normalization, which is similarly driven by the correction that we've entered recently. And if you look at the amounts of money that we're talking about here, it's a lot, right? We're talking into the T's now, not billions. We're talking about trillions. And I know that there was from the Middle East money pouring in and a contract signed in the next 20 years for $1 trillion in investment into the US. But that's 1 trillion, right? We're talking about 10 plus trillion total here. Now, obviously not all 10 trillion is going to sell off, but even a fraction of that is still huge money just from the size. And this could continue to put downward pressure into the markets that is not of domestic occurrence. And the reason why they're doing that, and you can't blame them, is, we've just had really high valuations in the US stock market compared to the rest of the world, right? So you look at gaps like this, right? They're going to resolve and come together at some point, and it's probably going to be a combination of this continuing to go down and this moving up like it did back in 2020 during the COVID crash. And so high valuations of the US stock market in general compared to the rest of the world is one of the main reasons why cash is leaving, now also accelerating because, well, there's a revaluation with the correction that we've experienced so far in March. And this, is a bad thing because it's not like there's no money in the world, right? The world's printing money, right? If you look around the world, like the Chinese and now the Europeans and even, other countries, they're printing money. So the global money supply, M2, is going up, right? But the thing is, that money isn't finding a home in the US stock market anymore like it used to, right? It's going down. And that is not a good sign. And you can see that in these two charts where you see that the US, right? If you scroll down and look at the world index and you look at the world index excluding the United States, right? That huge gap shows you it's not going to the United States here. And that is also shown in this chart when we're looking at the different basically regions of the world, looking at the 10-year treasuries and looking at this gap between the US and ex-US with the world. Like these gaps, right? Clear signals that money is not funneling, new money being printed, the increase in money supply in the world is not coming and finding a home to the United States. So what does this all mean for the next week? Well, now this is something I discussed on the Discord server, and we've I've actually, so the Discord server is quite interesting. There's great conversation. We're sharing really good proprietary knowledge there about how to invest and trade. But yeah, I've been hit with, I don't know if this is a good thing or a bad thing or both, but basically there's scammers impersonating me. So I made it clear on the Discord server that you gotta, anything like, in this case, they put a dot before FoFty Life, or sometimes they'll make the I another L, and so it looks like FoFty Life, but basically you'll know it's me if you see just FoFty Life without anything else, right? No dots and no L's looking at eyes. And I'll never ever ask for money or your personal information, anything like that, right? So at the moment you see a wrong username as highlighted here, or any money that, or anything, I basically won't ask you for literally anything except for just your support for the free platform. So if you see anything other than that, that's not me. But let's move back to the analysis here. So the base plan I have, right, is that I do think we're gonna retest and break a little bit lower than the previous low, and doing so will make a higher high, right, on the RSI, creating this divergence, right? This positive divergence where you make a lower low here in the price, and you make a higher high in the RSI, and this positive divergence will then translate into the real correction, which is yet to be seen if we're going to make a new all-time high or just basically be a bull trap and make a lower high before we have the real downturn really begin in earnest. And I believe that's happening. I said this was going to probably be the case back in March 18, and I made that my base case for trading. And since then, a couple of days later, yeah, we weren't able to break out of this, right? And there's a lot of overhead resistance here, and we're just kind of like just moseying around down here, which makes this more. The more we do that, the more this becomes a possibility, right? Because we haven't just shot through the resistance and bounced right back up. And the reason why I do think this is the case is, if you study the way markets bottom, they usually do it in two ways, right? The first way is you have a V-shaped bottom. And the V-shaped bottom means you have a flush out event. Basically, everybody gets freaked out. The VIX spikes to like 50 or some crazy high number. And volume is like, everybody's selling, right? Oh, panic, the world's ending. And you get this huge drop. And then you get this spike back up because everybody's out, right? And so now it's time to go back up. And then you'll have this V-shaped recovery. And that's one way the market makes a bottom. And we've seen that in the past, but this hasn't been that case. The VIX has never gone above 30 during this entire correction. We never had this huge high volume panic selling day happen yet. And so right now, we're tracking the second way we could correct, which is with this stair step down in a controlled, orderly fashion, with the VIX never really going above 30. And in those cases, you need to have a technical correction, exactly as I described here, which is that you put in these divergences as we go down, come down. You put these divergences, and these divergences then push the market back up. And that's what we're tracking right now. That doesn't mean we couldn't have a flush out. We may have a flush out, right? And really just drop and on high volume and high VIX, right? And then do a V recovery like that. That's also possible. But right now we're tracking the latter of the two ways we could bottom. And for those two reasons, I don't think we've bottomed yet, right? You rarely bottom on this like controlled fashion and then just go back up, right? This type of a V recovery is not the way it usually works, because a V recovery again requires super high volume, super high VIX, and then this wasn't that, right? So that means so far we need to have a technical bounce and recovery, which is what I'm positioning for in the coming week. Now I wanted to share again. So this is what I share in the Discord server, but I wanted to share the proprietary FoFty index. So I've given it a name, called it I was making fun and saying it was a super duper secret indicator on the Discord server, but I'm just gonna call it the FoFty indicator because it's a lot easier to say. But basically, this indicator has made me a lot of profit. The last couple of times it triggered, it was before. So this is a leading indicator. Okay, so before things happen, it tells me. It foretold me of this huge spike down when Powell opened his mouth. The other time it triggered was right before this huge crash that day. So I went short that day as well and pocketed all this cash. And then the very last time it triggered was right as the market moved up right from the short-term low, and I rode this up. And people on the Discord server can follow me because I put all my trades there and how much money I made. So and I do it in real time as it happens, so it's all timestamped without edits, so you can see that that's exactly what I did. Now, the reason I'm bringing it up here is it's beginning to curl up again, right? So this is a sign that we may experience a directional change. The trigger, the indicator tells of a directional change, either up or down, that's imminent. And because we've gone up temporarily, the directional change, I'm thinking, will be going back down. And once this continues to go up and spikes and comes down, you'll have that trigger and you'll have potentially a slide back down. Now, there's a bunch of supporting evidence for this as well from the VIX volatility term structure. So basically VIX forwards. You'll see that there's backwardation going into Liberation Day, right? That means people are, protecting themselves, basically. That's what the price of protection, which is a VIX, goes up leading into Liberation Day on April 2. So, because that is set basically and priced into the volatility futures, it's going to be a tough call to just bust that out before Liberation Day. So everybody's waiting, like the pizza image I showed you was, for Liberation Day to happen. There are other clues as well. If you look at the flow of funds. Now, I know there's another chart out there where people are saying, oh, after mid-March, the price goes up. Yes, that's true. But if you look actually what matters, which is the flow of funds coming in or out into the stock market, you'll see it actually goes down into the end of April, right? And then in April 2 is when the flow of funds goes back up. So I'm watching that as well, seasonality wise, as another reason, right, that we're going to probably struggle until April 2. The other thing I'm just watching is the price action, right? And, this is like Mount Mutombo. If you all my NBA fans out there, he's wagging his finger, right? Like this is a 20 and this is a 200. They did the death cross. They're confluencing over here. Can't do it, right? 1, 2, 3, and most recently we just went down. This is a very strong resistance, and this is quite telling, right? Because if you compare this, so the last time we had the 20 about to cross into the 200 and do a crossover was in November last year. I mean, on 2023 rather. Jeez, it's already 2025. So in November 2023, it was coming down, it was about to cross over, and it did it, right? It went back up, and we never had the death cross. So here we are in the same situation in March 2025, and unlike back then, you see this price structure and the strength of the rebound, right? Which in fact was a type of a V-shaped recovery, was there, right? You see the high volume, you see it, and went back up, and there was no pause. It just shot right back through the resistance, and that was it. It became support going up, leading it to the high earlier at the end of last year. And this time we came down, right? We didn't have a volume spike yet, and as we went back up, there's no straight shooting back up like we had back then. We were kind of stalling underneath. And that's not a good sign, right? That is weakness in the recovery. And that portends that we're probably not just going to bust through this on the first attempt. We're probably going to have a beatdown, which is another reason why I do think more is coming. Zooming out a little bit, this chart's been making the rounds, and it's a really interesting chart. So, there's a lot of data sets that have been put together, and, this is a 10 and 90th percentile across all corrections, right? All corrections, 10% corrections plus that have happened, right? So you see the range, and we're at this juncture over here at the market peak, since the market peak, which we've gone down quite a bit. And so basically, if it's just a correction, which is a dark blue, right? This is the way you would go down and then bounce back up and make new all-time highs after the 10% correction. And if it's a bear market, which is this lighter blue, this is a price action that has happened. And we start the bear market and go down. And so far, basically, we've been tracking more of a bear market price movement to the downside. And that's indicated by the quickness and severity of the downturn, right? So regular garden variety 10% corrections aren't so severe. They kind of go more like this, right? Whereas bear market, when it initiates, it's a more severe and more substantive correction in the shorter period of time. And that's why, if any Elliott wave out there, when you have that, you call that the impulsive wave one, and it's impulsive meaning it's strong. The move down is strong, boom, right? It's a knock to your chin, right? And it kind of takes you out. That's the kind of movement we're seeing and likely going to track. And this is based on, a whole ton of data, right? So it's something that we need to watch here. Also, recently, now the red line is basically the VIX inverted, so you can see it, and the green line is the S&P 500. Now, usually they track them each other quite well, meaning like S&P goes up, VIX goes down, S&P goes down, VIX goes up, because they're inversely correlated. But what we've seen basically ever since around mid-March is a divergence. We don't like divergences. Bad things happen. But basically, the VIX has been steadily dropping, or in this case, going up because it's inverted. But the stock market hasn't really been going up as much, right? And so this complacency, basically VIX going down, this complacency hasn't led to stock markets going up as much as it normally should, right? So this divergence between the fear or complacency in the stock market price appreciation, this is going to get resolved, right? So it's going to get resolved of one of three ways, right? Like either stock market just, shoots up, like boom, just shoots up, or the VIX is going to just completely like spike up to where it should be, or both. They'll meet somewhere in the middle. But this is going to get resolved, and that's what I'm looking for. Now, some people have been saying, like, the stock market's been capped at this because of OPEX or options expiration that just completed this Friday. So now that options expiration is completed, we're going to go all up. These are the same people that were saying on options expiration, price is going to skyrocket because of all the short covering that the market makers will have to do, because a lot of the options were puts, so the market makers would have to cover that. And so we'd have this huge short covering rally, which just didn't really materialize, right? We ended up pretty much flat, and it was the zero DTE traders that came in at the end to push it up from negative, which on low volume. But let's take a look at volume as well. And people saying like, oh, volume has increased, but you got to look at where the volume, now this is the VOLD, right? Now, if you don't know what the VOLD is, it's basically the total volume of the stocks that went up, net of the total volume of stocks that went down. And we don't care about whether it went up 1 or 50% or it went down 1 or 10%. As long as it's negative, that's the volume. And as long as it's positive, that's the volume, and you net the volume out. And basically, this is a chart in Thinkorswim that I coded in, where it tells you automatically a divergence between the stock price and the vol. But basically, what's going on is if the stock price is going up, but the overall volume of the stocks that have gone down is greater than the overall volume of the stocks that have gone up, then that's a divergence, meaning money is actually selling even though the price has gone up. And you can see that here, right? So like on Friday, the VOLD was actually negative, meaning there's more sellers in volume, right, than there were buyers. But the price had gone up. And whenever you see this, that tells you that this is not going to sustain. We saw it back here, right? It's going up, but it's red candles. It's going up, but it's red candles. What happened the last time when it went up with red candles? It went back down. Most likely what went up with red candles going to go back down again, because this is telling you people are exiting the market. The reverse of this would be, of course, to see price going down and the candles are green. That would mean the price, price is going down, but people are buying net, right? And so that would be a bullish sign, and you want to like position long in that case. And there are many instances in the past if I show you a longer term chart of this, but right now we're doing the opposite. We're going up with red candles, meaning volume going down. So that means people getting out while the price action is going up. And who are these people? I don't know. Maybe they're foreigners. I don't know, right? We'll see what happens in the future. The last thing I want to just leave over here is, it's interesting to note here, Bitcoin is now 1.3 of the total money in the world, right? 1.3%. Gold is still a huge percent, right? And everything else is fiat money, right? This is fiat money. And this goes back to the whole genesis of FoFty and what we're doing now. This system is going to change because of all the, you can see what's happening with all the gold moving back to the United States, Fort Knox gold audit, the creation of a Bitcoin, a strategic reserve. These things aren't like one-off. These are coordinated things that Bassett and Trump are thinking about how to restructure the financial world order, right? Because of the changes that have happened. So this is going to move over here, right? And so how you're going to play that in the long term is a big chunk of why FoFty exists, so that you take advantage of it and don't get, shafted, and how to position yourself strategically so that you can actually benefit from this shift that's happening right underneath our feet. So having said that, I got to go back to packing and moving. I hope this was helpful for you. Give it a like and subscribe if you want more of this information. And do join us on Discord for more proprietary day-by-day market analysis and information. Till next time, I'll see you. Peace.